Is not what you think, is not what you heard, and is not what you feel. It's about what number is better for you. So you want to invest your money and you don't know which investment will you want to put your money on, and you have had decision to make. What you have to look is a number, not feelings, not heard from somebody. No, it's about numbers, to present numbers, and that's what I'm good for. I like numbers, I like data, and I have a lot of data on with me. And on this channel today, I'm going to talk on one of the most popular ETFs, which is HYLD and HMAX. And you want to invest your money and you don't want to spread yourself too thin, right? And you say, well, I want to buy one of these ETFs. So which one should you buy? So I'm going to talk about these two ETFs deep. I've talked about deep about these two ETFs, and today I'm just going to talk about brief. But at the end of this video, you'll be able to decide. I'll make this your decision making super easy. So just stick with me, and if it's your first time, just make sure you like the video, and also you subscribe, and you can share with your friends too. So let's go. So we have Hamilton Enhanced US Covered Call ETF, or HYLD, which yield about 14.25%, and we have Hamilton Canadian Financial Yield Maximizer ETF. So we look at the highlight first, right? Highlight yield about 14.25 with monthly distribution. This one 13 with monthly distribution. Portfolio cover more of the US equity versus this one is Canadian banks. When it comes to how to buy this ETF, of course, this HYLD, you can use either Canadian dollar or you can buy also with the US dollar. This one is only Canadian dollars. Who is good fit for? We look at is it good fit for you between these two funds? Of course, this one is person who is looking for attractive monthly income, and this also is monthly income. The difference comes to diversify blue chip US equity, and then you are looking for more of a bank exposure in Canada only, right? When it comes to a high yielding, they pretty much have the same high yielding, and tax efficient, they all have tax efficiency. Enhanced growth potential, which add about 25% leverage. This one doesn't have any leverage. Fund objective, of course, the fund, this one HYLD, a fund to provide attractive monthly income and long-term capital appreciation from diversified multi-sector US companies. And they mainly, of course, S&P 500. When you come to HMAX, designed for attractive monthly income while providing exposure to market cap weighted portfolio of Canadian financial services stocks to reduce volatility. HMAX, of course, will employ something called covered call ETF strategy, which this one also does have covered call strategy. So it's pretty the same. The only difference, of course, this Hamilton, the bank, or HMAX, does not use leverage, where here you have that 25% leverage is being deployed on this fund. Of course, the ticker symbol is HYLD, and ticker symbol of this one is HMAX. We look at the yield. Of course, the yield is 14%, and here is 13%. When we look at, this is performance. So let's look at performance first. We can go back and see. Actually, I'm going to go to performance last, because that's the main thing you'll want to look at. Will it yield you? Will your fund make you more money in the end? That's what we're going to look into. That will be the last thing we're going to have to look. Let's look at the sector for now. We'll look at the sector allocation. Of course, the HYLD, it has 11 sector, because remember, it's S&P 500, and S&P 500 has 11 sector of the market. When we look at HMAX, has only 3 sectors, or pretty much you can kind of narrow down to 1, but subsectors, they come to 3. There's asset management, there's a banking, and also there's insurance, right? They're all fall into kind of financial, but of course they subsectors them to make them different. But so let's say 3 and we have 11, right? When we look at the holdings, we have the 10 bank and financial and insurance companies, and they're all Canadian companies. When we come to HYLD, we have, of course, 500 companies, but those 500 companies is not direct. They're under the other covered call ETF. Mainly, for example, QYLD is Nasdaq 100, and there's a Russell 2000, right? There's S&P 500, there's JP Morgan, Equity Premium. So you can see also there's a gold, and there is healthcare, where you don't have any healthcare here. You don't have any S&P 500. It's all more just straight finance. So we look at fund management. We look at the 65. We got a 65. Rebalance. This one is semi-annual. Here they didn't tell when exactly they do rebalance, but it's pretty much, you don't have to worry about that. I think they all rebalance pretty well. So let's look at the last thing, which will be performance. You invest in these funds, and how are they performing between the two? So I have the data here. We look at this. So you invest $10,000 in 2013, so about 9 years ago. If the red one is HYLD, and then the portfolio one, which is HMAX, is a blue one. So you would have $10,000 today. You would have, with all the market crash on the way, you would have $45,378. This, bear in mind, this is just growth of the fund without having to receive those dividends. We did not reinvest all the dividends. This is just the price. And so what I did is I take those 10 banks, I compare with S&P 500. Of course, we look at that because HYLD it doesn't have the record of 10 years. So we did the prox. I did ZSP, which is the BMO S&P 500 in Canada, and the reason I use this one is because the ZSP uses Canadian dollars, right? So same as HYLD. So I use S&P 500 compared to the 10 stocks that HMAX invest in, and I get the pure number. That's how we compare. People who follow data, not feelings, as I say. It's all about numbers, because they say number don't lie, right? So we look at that. That's performance. Or technically, we look at how much overall. If you HYLD will give you about 16% annually, within 9 years, and then versus HMAX would only give you 12.52 annually within 9 years, which you can see right there. So again, just a reminder, it does not include the dividend reinvesting. That's just performance of the fund. So between this, we've seen this is just a brief of this, because I've gone, if you want to look one by one, I've already made a video on those ones, right? There's either HYLD, there's a video for it, and HMAX, I already just made a video a couple of days ago. So now we go into the jury to see who won. I made a little chart here, HYLD versus Max, who won. I have a 5 category that I judge them accordingly. We look at the risk. HYLD and HMAX, they're all medium, so they all draw. When it comes to fees, they're all 0.65 basis points, which they draw. When it comes to diversification, we have 500 stocks versus 10 stocks. Of course, the winner is HYLD. When it comes to performance, we have 16.48 annually within 9 years. We have 12.52 within 9 years. HYLD, of course, is the winner. When it comes to yield, we have 14% and we have 13% HYLD winner. So if we look at all these 5 category, and we've seen, of course, HYLD is way ahead, and we have 5 points HYLD, and we have HMAX 2 points, and the winner is HYLD. There you have it. And so if you want to invest your money, decision is yours. I've made it simple for you, using the number, using the data that I have, So again, if it's your first time, just make sure you subscribe. And leave a comment if you want me to compare any other funds you are interested in investing. Okay, that's it. Till we meet again. Bye bye.